Good afternoon, everyone, and welcome to this Nadex webinar. My name is Todd Rich. I'm head of education over here at Nadex. And today we are going to take you through an introduction to trading short-term products at Nadex. And we are going to go through the products that Nadex offers. And we're even going to play around with the platform a bit so that you can see and maybe get a little comfortable with how to navigate the platform, how to understand the products on the platform so that you can really get up and go and do it yourself. I would like to welcome, by the way, we've got a nice crowd, a nice crew here today on this webinar. And for those of you who are new to Nadex, welcome. We have had thousands. It's been an interesting year as retail traders have looked to come into the markets, and Nadex is a natural place, particularly for folks who are a little new to the markets, due to the fact that all of our products have defined risk, defined reward. So there aren't any surprises. They're sort of preset trading plans baked into a product. With that, I'm just going to ask, I want to make sure I am delivering this over the internet. If everyone can hear me good, just somebody type into the questions box. And I want to get you used to typing into the questions box because this is an interactive session and I will ask for input. Just let me know that you can hear me and that I'm coming through loud and clear. That helps me out. I just want to make sure I'm not having any technical difficulties right up top. So let's jump into it. And before I get into the presentation, I do need to share this disclaimer, as this webinar, as are all of our webinars, are sponsored by our compliance department. And I need to let you know that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And lastly, this is an educational session. Please don't construe anything I say today as a buy or sell recommendation. We are doing this for your education purposes. And that becomes infinitely more clear when I get into the platform, because I am going to be clicking around and showing you some things, and we'll put on some practice trades, things of that nature, just so you can see how it all works. Before I get into the presentation, I am going to show this a couple of times. And I'm mentioning this now, this is an interactive session. We are here to help you. I am here right now to help you. And so if you've got any questions during this session, please type them into the questions panel. I will try to answer all of them as we go, or I might circle back at the end. If I do not get to your question for some reason, you can always email customer service at customerservice@nadex.com. They are very responsive. The only way we can help you if you're having challenges with our products, the platform, the markets, your account, whatever it is, would be to reach out to us. So please let us know how we can help. I'm also going to mention that you can follow us on social media. We are across the board on social media. The one in particular that I would really like to point out is YouTube. I would highly recommend that you go to YouTube and follow or subscribe to the Nadex YouTube channel. I am recording the session. It will be available both on the Nadex website. If you go to the Nadex website and you go learning, webinars, and into the archive, you'll be able to find the recording there. In fact, if you even go to webinars, you'll see all the upcoming webinars that we've got planned out for the next month or so. In fact, in there, if you even looked, our next boot camp is already up there, even though that boot camp, which is around FX trading, foreign exchange markets, it's June 22nd. You can even register for that now if you wanted to. But on the YouTube channel, we put all of our recorded content there as well. And every morning, 7:45 a.m. Eastern, for 15 minutes, we do a live stream. We do a live stream and we talk about potential hotspots in the markets for that day. We try to finish by around 8 a.m. so that everyone has a half hour before the U.S. equity markets open to get situated, but maybe have some ideas on where they want to focus, because real estate and what you can look at, screen real estate and what you can look at and mentally handle, sometimes it helps to just flush through what happened yesterday, what happened overnight, and what to potentially be looking forward to the day ahead. So that is all live streamed on YouTube every morning. You can even find all the recordings back there as well if you ever wanted to take a look. All right, enough about that. Let's talk about what we're here to talk about today. One, because we have so many new people joining Nadex, I do spend a couple of minutes talking about who Nadex is. And I sort of teed that up at the beginning. We have so many new people, not just to Nadex, but to the markets in general. I do like to talk just for a few minutes about Nadex. Then we're going to talk about the short-term trading products that Nadex has. We're going to start with binary options. Most people come because of the binary options, and I want to be clear, we're going to definitely spend time there, and we'll probably spend more time on the platform on binary options. But we also offer some other products. Knockouts, which I personally find to be our most intuitive product. Rather interesting, but if you're not familiar with what knockouts are, we are going to go through it. I guarantee you, at least I hope, I hopefully guarantee that at the end you'll understand knockouts. They're pretty straightforward. If you understand knockouts, call spreads are a natural product to understand as well. But sometimes you need somebody to take you through the basics of those. I am going to do examples of all of these, and I get very practical. I like to say this and mention it. My mom is from the great state of Missouri, or if I'm going to pronounce it right, from the great state of Missouri, and it is the show me state. And I like to show. I think that it resonates really well if you can see it in action. It makes a lot of what we talk about during the slideshow presentation piece infinitely more practical. I am also going to mention right now that if you want a copy of this slide deck, if you want a copy of this slide deck, and if you're watching the recording of this later, so someone who might not be on right now, if you'd like a copy of the slide deck, you simply need to email customerservice@nadex.com and request it. Tell them the deck, the presentation, and the date, the one that you're looking for, and they'll be able to get it to you. So a little teaser right there in the middle before we get into the full-blown presentation. All right, who is Nadex? And in the financial services industry, we love our acronyms, and Nadex is simply an acronym for North American Derivatives Exchange. So it makes sense, but if you weren't familiar with what it stood for, now you know what it stands for. And what is Nadex? Nadex is a regulated exchange. Right? And it's an all electronic exchange, and we are regulated, another acronym, the CFTC, the Commodity Future Trade Commission. Now, the reason I like to point that out is the CFTC, the Commodity Future Trade Commission, is the same regulatory body that regulates all of the large futures exchanges in the United States. In fact, any futures exchange operating in the United States has to be regulated by the CFTC. So when you think of the CME, the Chicago Mercantile Exchange, very large international company, they're regulated by the CFTC. The ICE, the Intercontinental Exchange, they own the New York Stock Exchange. They bought the New York Stock Exchange. They are also regulated by the CFTC. Nadex is regulated by the CFTC. Now, that is really important, particularly when you talk about binary options. There are only a couple of binary options providers out there that are regulated by the CFTC. I think we are only one of two that is currently operating. So someone has a medallion but isn't operating the exchange yet, I don't believe. And the other one that does have a medallion that's open doesn't trade. They have some weather contracts or maybe a few contracts a year, or nothing really trades. So when it really comes down to it, when it comes to binary options in the United States, Nadex is the premier binary options exchange in the United States, and we are regulated. We have to adhere to all the rules, laws, and regulations of the United States. We are audited by the CFTC. There's no nefarious, odd behaviors going on at Nadex. Fully regulated. Now, there are other binary option providers in the world. You can probably find them if you get on the internet, and they can be found out there. They, in all likelihood, are not regulated by the CFTC. In fact, I could tell you they're not. If you're finding that if they're an offshore exchange, they're not. And if you're doing business with an offshore binary option provider, I would simply say caveat emptor. Buyer beware. If you had any challenges, problems, issues, and you wanted some type of recourse, I wish you luck in your journey. You're just doing business out in the internet. With Nadex, you are doing business with a properly regulated, audited, monitored U.S. exchange, and we are regulated by the CFTC. Enough about that. I really wanted to hammer it home because I know that binary options do have a little bit of a bad name out in the world. There are nefarious actors out there doing nefarious things. Nadex is not one of them. We are absolutely not one of them. We are monitored, regulated, audited by the CFTC in the United States. Okay, enough about that. I've hammered it home. Now, why was Nadex invented? And this is actually why most people are here on this call, or all these thousands of new people coming to Nadex markets, is we have contracts designed for the individual retail trader. These are for retail traders. They are very small notional contracts. Small is the new big. I know even if you look at some of the other futures exchanges where they've got mini contracts or even micro contracts, they still pale in comparison to the tiny individually sized bite-sized contracts at Nadex. And that is that low cost to entry. You do not need thousands of dollars to access Nadex markets. You can do so with just a couple of $100. The other thing is every one of our contracts has defined risk. You know exactly what you're getting into before you place a trade. You know what your best case scenario is. You know what your worst case scenario is. There are no surprises. There are no, oh, I just got a margin call, or, oh my gosh, I lost more than what was in my account. That simply can't happen at Nadex. When you get into a trade, you cannot lose any more than what you initially put into the trade. So there won't be any shocks or surprises the next day that, oh my God, you owe somebody money because you had a massive margin call or your entire account got wiped out and went negative. That can't happen at Nadex. We've got small contracts designed for retail traders, low cost to entry, defined risk. Okay. So hopefully that's all clear. If anyone has any questions about any of that, go ahead and fire away. But what Nadex does have are binary options, knockouts, call spreads, and it's all about short-term price action. And a lot of the way people access our markets and trade them is through technical analysis. I will show you a bit about the tools that we've got available on that. Let's get into it and let's talk about binary options first. So first, let's define a binary option. And as you're going to see, short term is going to be something you're going to see a lot. A binary option is a short-term defined risk reward contract. And that contract is made up of 3 components. It's a statement, all right? It's a statement, it's a prediction, right? And in that prediction, the 3 components are the underlying market, a condition, and an expiration time. I am going to randomly select gold just for fun, okay? Let's just pick gold for fun. That's going to be the underlying market, the example I'm going to walk through. When we go to the platform, I would love if anyone typed in contracts they would like to see, markets they would like to see. I will certainly use them as examples when we get into the platform. But for now, let's just take the underlying market as gold. Then there's and by the way, and actually we'll get into all that later. The underlying market gold, the condition, will gold be higher than? Will gold be higher than? And we're going to give you a condition, a strike price or a level. Let's just pick a price, 1870, $1,870 per ounce. Okay, I'm just picking a number. And then there's going to be an expiration time in the next 2 hours, at the end of today, at the end of the week. You're going to have a variety of expiration times to choose from. So at Nadex, you've these binary options. It's a statement or a prediction. Market, condition or strike price or level, and an expiration time. Will gold, by the way, there's There's commodities markets, gold, oil, silver, natural gas. There's foreign exchange markets, all your top FX pairs, the euro US dollar, the Great British Pound US dollar, the US dollar, the Aussie dollar. You can go, I mean, the Aussie dollar, US dollar. You can go through all of them. We've even got equity indices, the S&P 500, the Dow Jones Industrial Average, the NASDAQ, the Russell. We've even got global equity indices like the DAX in Germany or the FTSE 100 in London. So we've got a variety of markets to choose from. You could pick the market that you like or pick the market that's hot. The condition, you're going to have a variety of different choices on conditions or strike prices and expiration times. You're going to have a variety of expiration times. So you can customize the trade to your time horizon, to your risk reward, to your prediction, and you can build the trade the way that you want to build the trade. All right, now, interesting enough with binary options, it doesn't matter whether you're buying or selling, the risk reward is capped. Everything is known up front. And there is a really important word in there. At Nadex, you can buy or sell binary options. You can do both. You can buy them, you can sell them, you can trade out of them, you can switch your direction, whatever you want to do, you can do it at Nadex. There are some binary option providers that, one, don't give you the variety of choices that Nadex has. Two, don't give you the different conditions. Three, might not give you a variety of expiration times. And four, they might only let you buy. Right? We give you the choice. Now, some people think that makes it confusing. We like to think of it as variety and allow you to do what you want in the market. We're not going to force you into a particular type of trade setup. We're going to let you choose. Now, a binary option will trade between 0, we can also call it the floor, and 100. It trades between 0 and 100. Now the question is, what does 0 and 100 mean? So let's talk about that. Number one, a binary option is a true or false type of prediction. So in the end, either the event occurs or it does not occur. Will gold be higher than 1870 at the end of the day? Right? And the answer is either yes, it will be, or no, it won't be. Right? There's only two possible outcomes. Okay. Now, that is why it's called a binary option. There are only two potential outcomes. Right? It's either true or it's false. In the end, it's either true or it's false. Now, if in the end it's true, the option will settle at 100. And if it's false, it will settle at 0. Okay? And what are you actually looking at? The price of a binary option can roughly be thought of as the probability at that moment in time that the event will be true at expiration. So let's think about that. If there's early in the day, if will gold be higher than 1870 an ounce at the end of the day, and let's say it's this, right now, there still might be a couple hours left to trade gold. If it's trading right at 1870, which we would call at the money, if gold is currently right there, there would be an equal probability, a 50-50 chance that it ultimately settles higher than 1870 or at 1870 or below. And so you would probably see the price of that binary option around 50, meaning at that moment in time, the market is generally saying there's a 50% chance that this will go to 100 and a 50% chance that this will go to 0. Now, the interesting thing about Nadex binary options is not only is that the probability, but because our binary options have a maximum notional value of $100, it is also the dollar amount. So we make it easy. Now, you don't have to do the math. You don't have to calculate anything because we trade in smaller increments than 1. But in the end, that probability also turns out to be the dollar amount. So let's explain that. If gold, we're currently trading, the binary option, we're trading at 50 because will gold settled in 1870 or higher, yes or no? And we're right now at 1870. And I bought one at 50 because I thought it's going to settle higher than that. That's the most that's my maximum risk. I just I risked $50. I said, I think gold's going higher. I'm going to buy the contract. I buy it at 50. Now, what am I looking for? I'm looking for that to go up. And in the end, I can hopefully wait until expiration, maybe wait until expiration. And if it settles above 1870, it settles at 100. It became true. I risked 50. It went to 100. I made 50. All right. And there we go. I risked 50 to make 50. I got 100% return on my money. Now, if I buy one at 50 and it settles at 1870 or lower, so that it was false, it would go to zero and I would lose my $50. Now, if you thought that gold were not going to settle higher than 1870, your choice would be to sell it. You can sell it at 50. All right. And if you sell one at 50, you're looking for it to go to zero. And if it's false, it goes to zero and you made $50. But if you sell one at 50 and it becomes true, it will go to 100, settle at 100. You will have risked 50 and it would have gone to 100. You would have lost 50. Okay. So you can either buy or sell binary options. And the number that you're looking at, while it's the dollar amount, it is also the probability of the prediction of the statement being true. So let's actually walk through one a little bit differently. And let's just use, now this is a separate example. Will the S&P 500 be higher than a certain price and the binary option is trading at 35? If I bought it, all right, I risked 35, and that means there's only a 35% chance at that moment in time that it will be true as priced by the market. That means there's a 35% chance it'll go to 100. So maybe it'll go to 100. If I buy it at 35, the most I could lose is 35 because it could go to zero. But if I buy it at 35 and it's true and it goes to 100, I would make 65. So I'd be risking 35 to make 65. Someone could say, you know what, there's only a 35% chance it's going to 100. I think that's a low probability. I could sell it at 35. Now, the person who sells it at 35, the most they can make is 35 because it can only go to zero, but they could lose 65 if it goes to 100. All right, so that is how binary options work. It is a true or false prediction, yes or no. If it's true, it goes to 100. If it's false, it goes to zero. You can buy a probability. All right, that's really what you're trading, is the probability that the event will be true. Now, the interesting thing is those probabilities will fluctuate throughout the day, and you do not need to wait until expiration to see what happens. So if you bought a 25% probability, I bought one that was low, there's not a lot of chance it's going to go to 100, but it goes to even money. So let's just say, let's go back to gold now. Will gold settle at 1870? And gold was trading at 1850. So gold would have to go up $20 an ounce in the time frame for it to go to 100. Gold's got to make before it even becomes. But if I might be able to buy that for just $25, a 25 probability, 1 in 4 chance that it would go to 100. I buy it at 25 and it goes right to the strike. Now, what did we say earlier? If it goes right to that condition level, that strike price, it would likely be trading right around 50. Now, I risked 25. I was looking to make 75, but right now it's at the money. I don't know what's going to happen. Maybe I'll be happy just selling it at 50. And I risked 25. I made 25. I made 100% return on my money. I'm out of the trade. I'm done. And I can go and look for another opportunity. So you do have those choices. You can day trade binary options. There are no day trading restrictions. You can knock them back and forth. You can change your mind. You could turn your prediction over. Whatever your analysis says, you can trade these all day long. Now, similar to other traditionally listed options, a binary option, time and volatility will be factored into the price of the binary option. The longer there's going to be some volatility component. if there's a lot of time, and if it's lower high volatility, that will be factored in, but the market will price that in. The market will price that in. So it's the price of a binary option will fluctuate as the underlying moves, if as time moves, and we will do an example and you will see it. You will see it because time is a big component on binary options. And if volatility is high or low, it will also change how those get priced. All right, and I think I answered the questions on binary options. If anyone's got any more questions on binary options, type them in. I will get back to them when we move over to the platform. Okay, good. Now I'm going to talk about knockouts. Knockouts, I think, are the most intuitive product we have because you're trading a price level. So let's first talk about what a knockout is. And a knockout is a contract, and it has a preset price range, right? And that price range has two levels. You know, we've used this term floor and ceiling before, but on a knockout, there will be a low price level. We'll call that the floor, and there will be a high price level. We will call that the ceiling. And between the floor and the ceiling, there will be the price of the underlying contract. And the value of that contract will move right in line with the underlying market. It is what we call a Delta 1 product. So let's talk about a knockout. If let's just say gold is trading at 1870, we might have a knockout range of 1850 to 2000. All right, I'm just making that up. And gold, you're simply trading the price of the underlying market. So it's going to move exactly in line, and the price that you see and that you're going to trade will be the price of the underlying market. And it works like any other market. If you think the price is going up, you would buy it. All right, I think gold's going higher from 1870. I'm going to buy it at 1870. If you think it's going down, I think gold's going lower than 1870. I can sell it at 1870. Now, I know that's a little confusing to some people because they think, how can I sell something that I don't own? And this is why we have a contract. You're not actually selling the physical commodity. We are trading a contract that is tied to the price of the commodity. You are simply trading the price of the underlying. That is what you are trading. So you can sell that price, and what you're doing is you're taking a short position or a bearish position. You are predicting that the price is going to go lower. So a knockout, it is a Delta 1. You are simply trading the price of the underlying. If you think it's going up, you buy that price. If you think it's going down, you sell that price. Now, what is the purpose for then having the range around that price? All right. And this is how knockouts expire. So a binary option will expire at the end of expiration, right? And we'll know whether the prediction was true or whether the prediction was false. With knockouts, there are two ways that a knockout expires. The first is what we call a price triggered settlement. If the price of the market touches either the floor or the ceiling, the contract immediately expires and everyone is knocked out of the trade. That is why that's why they're called knockouts. So let's just say, let's go back to that gold example. I think gold is going higher. I buy my price level of 1870 and it trades up and touches the ceiling. If it touches the ceiling, I am knocked out of the trade and I experience maximum potential profit. It's essentially a profit goal. When you buy a knockout and you're looking for it to go to the ceiling, that is your maximum profit goal. If you buy a knockout and it goes against you and it touches the floor, you would get knocked out of the trade for maximum loss. What you would essentially think of that as is a stop loss. I buy gold, I think it's going higher. I bought it at 1870. If it goes up and touches the ceiling, boom, I'm knocked out, maximum profit. Now, if it keeps going higher and higher and higher, I can't make any more money. I got knocked out, but you had a profit goal thank you very much, move on to your next trade. If you wanted to stay in that trade, you could simply buy another knockout. If it goes against you and touches the floor, you get knocked out. You're essentially stopped out of your trade. You were wrong. So you've got this range that you can choose from. Now, with Nadex knockouts, we offer you a variety of ranges so you can choose the knockout that suits your risk-reward profile. Now, I want to walk through a quick little example. Let's say you think gold are going lower, right? You think gold's going lower. You can sell that price level. You sell it at 1870. You want gold to go lower. If gold goes higher and touches the ceiling, oops, you were wrong. You're knocked out, maximum potential loss. But if you sell it and it goes down and touches the floor, boom, you're knocked out and you've got maximum potential profit. You know, going into the trade, the most you could potentially make and the most you could potentially lose. You see what those knockout ranges are. You pick the range that's got the floor and ceiling that fit your risk reward profile, whether you're buying or whether you're selling. And we give you a variety of knockouts to choose from so that you can pick the right one that works for you. Now, the question then is, what happens if it doesn't touch the floor or the ceiling? The other way a knockout will expire is by time. So there is a time component on knockouts. They're set to expire at the end of the week. And if a knockout hasn't touched the floor or ceiling, it will expire at the end of the week. And your profit or loss at that point, it will settle at a price, right? We will settle the knockout at a price at the end of the week, and your profit or loss would simply be the difference between where you bought it or sold it and where it settled. So you'll have either a partial profit or a partial loss if it doesn't touch one of the knockout ranges, if it doesn't touch the floor or ceiling. All right, are there any other questions about knockouts? I think they're the most intuitive. You are simply buying a price level, and essentially it's a pre-built trade. It's got your exit level and it's got your stop loss level, and you choose the knockout, and I will show you how to do that quickly and easily on the Nadex platform that fits what you think is going to happen with the proper risk parameters around the trade so that, again, there are no surprises. All right, if you understand knockouts, you're going to understand call spreads. All right, what is a call spread? A call spread is a contract, just like a knockout, that also has a predefined range that are called the floor and the ceiling. Hey, this sounds really familiar, doesn't it? Like, hey, this sounds like a knockout. So far, it is like a knockout. And the value of a call spread will move in line with the underlying market, similar, but not the same, similar to a knockout. Now, what is it? There are two very, very, very distinct differences between knockouts and call spreads. Okay, and this is the big difference. Number one, a call spread only expires at expiration. Okay, so with a call spread, you're going to have that floor and that ceiling, and if it touches the floor or ceiling, you are not knocked out of the trade. You are still in the trade. So some people go, that's kind of cool. There's some flexibility, or what we call optionality, in call spreads. You choose a call spread and it goes against you, you're not knocked out of the trade. You have time for your trade to potentially be right. So there is no price triggered settlement. Now, because of that, now we mentioned that knockouts are what we call Delta 1 products. They move exactly in line with the underlying. As the underlying ticks, the knockout will move right with it. With a call spread, there will be, because it has that optionality in it, volatility and time to expiration will impact the price of a call spread. So it won't be, a Delta 1 product. There will be a premium in a call spread. So when you're buying a call spread, you'll you'll have to pay a little bit more than the current market price because you're going to be paying a premium. If you sell it, you're going to have to sell it below a little bit. So there is a premium that is baked into it, and that is because there is optionality so that if it touches a boundary, you don't get knocked out and you have time for your trade to potentially be right. So there is a cost to trading call spreads, but there's a benefit to that cost. You've got to determine. Sometimes call spreads work better for people because they like that optionality. Others don't want to have that premium component. They just want to know they're trading the price of the underlying. It's Delta 1, and I get knocked out. I hit my profit level. There's no slippage. Boom, you're out. You hit your loss. There is no slippage. Boom, you're knocked out. Some people don't like getting knocked out for a loss only to watch it come back in their favor. They go, oh, if I hadn't got knocked out, that would have worked. Well, maybe you should have traded a call spread. And based upon your trading style, your risk reward profile, what's going on in the markets, some people like to trade knockouts. They like that price being very clear and understandable and those levels distinct. Others like to have that flexibility, optionality around those price levels, and they are willing to pay a premium to have that kind of functionality baked into it. So as I said, knockouts I think are pretty straightforward and intuitive. If you understand knockouts, call spreads sort of make sense. But we covered binary options up front. I'd like to get over and play around on the platform for a while because we do make it easy for you to see the different types of ranges for call spreads, knockouts. And I am going to go through some examples of binary options because I want you to really see how binary options move. And we're going to do some examples in a very volatile environment for you to really see. It hyper inflates all of the moves in binary options. But I want you to see it so you can really understand them. The one thing, and if there's nothing else you take away from today and you go trade someplace else, an important rule when trading any Nadex product, and I'm going to say this is true for other options for the most part as well, unless you have European style options, but it's an important rule when trading any Nadex product. Any Nadex, and I've mentioned this, but this is the ring, 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 pay attention. Just because there's an expiration associated with the contract does not mean you have to wait until expiration to see what happens. I'm going to say that again. Just because there's an expiration associated with a binary option, an expiration associated with a knockout, an expiration associated with a call spread, does not mean you have to wait until expiration to find out the outcome. You can choose to exit a position early. And why would you exit a position early? You would do it to either lock in profits or limit losses prior to expiration. And I sort of walked through that with a binary option. If you are trading binary options, call spread, knockouts, and the trade is going in your favor and you would like to take your profits and lock them in, you simply unwind your position. So if you had bought one, you sell it. If you had sold one, you buy it back. And you're out of the position and you made a profit. You can also do that to limit your losses. Let's go with the binary example. I buy one, it's got a 50-50 chance that's going to go to 100. I buy it at 50. It's now trading down at 25. All right. The price has gone down. I was wrong. I want to admit that I'm wrong. I can either wait and see, and maybe it comes back, or I could lose all 50 and let that last 25 go to zero, or I could just sell it back out at 25 and take my lumps. I risked 50. It went against me. I sold it at 25. All right, I lost $25 on that trade. Not good, but that's actually better than losing all 50 if I determine that my prediction was wrong. It didn't do what I thought it was going to do. It went against me. So with knockouts, with call spreads, with binary options, you can exit the position early. Simply unwind your position. We've got some new functionality coming to help you with that, but I will actually show you how to do that on the platform as well. But it's important to know that you do not have to wait until expiration to see what happens. Again, any questions, please. I think I answered everyone's questions so far. So if anyone's got any more questions, please type them in now. If you would like to see me do a demonstration or use a particular product as an example, I'm about to jump over to the platform. Type in the product you'd like to see. I'm more than happy to use your suggestion if you would like to throw in a market. I want to remind everyone also that you can follow us on social media. And again, I would encourage you to subscribe to the YouTube channel. Really subscribe to that YouTube channel. Go to YouTube, search for Nadex, you'll find it, subscribe to it, and you can take a look. Again, every morning we actually have 2 morning videos that are available. Our chief commercial officer does a very early morning minute and a half recap real quick. And then at 7:45 Eastern, I go through with my partner, Brian Caprice, from Keep Trading Simple, and we do some analysis. We bring up the charts, we take a look at technical analysis, and every morning to help you look for potential hotspots. The last thing I'd like to point out is if you are new to Nadex, or even if you've been around for a while, share it with your friends. If you have a live account, you have to have a live account, and you're up and trading, you can see there's a copy join button. You can invite your friends to sign up, and if they open an account and place 5 trades within 30 days of applying for their account, we'll give them $100 and we'll give you $100. Everyone gets $100. I'm like giving it away like Oprah. So if you get $100, your friend gets $100. You can do that to up to 10 friends. If you get 10 of your friends to open an account, place 5 trades within 30 days of applying for their account, they'll each get $100. So 10 of your friends will have $100 in their Nadex account, and you would have gotten $1,000. So a great refer a friend program that we've got operating over at Nadex. Okay, and thank you. I am going to do, it's so funny as I've got people asking for the indices and for the US 500 specifically. Maybe I should have used an index as an example instead of gold. All right, we are now going to jump over to the Nadex platform. Give me 1 second here, and that should change. Boom. It's just that easy. Okay, so I'm going to do a rundown of the platform. This is not a full-blown functionality of everything on the platform. We do have sessions recorded on our YouTube channel as well as on our website. And I believe we do about 1 a month where we do a deep dive into the platform. Sometimes I do it, sometimes our head of product, Adam McCaden, jumps in. In fact, I think he'll be doing the next one. And you get access to the expert. And it's nice for you to get access to him because you can always also tell him, hey, I want this. Hey, I want that. Let's start quickly because we're going to work our way backwards. I'm going to start with knockouts first. Okay, and I am going to I'll do the indices. Let's just take a look. We're going to use the US 500. I'm going to click on any one of these. Notice how there are always 4 knockouts available under each one. Now I'm going to hide that. I'm going to actually hide this position panel as well. And I want to make this a little bit bigger so we can see. I just want you to clearly see the left-hand side. Okay. This is the S&P 500. This is a chart. I'm not going to go through the functionality on the charts up here where we've got time frames and indicators and drawing tools and all sorts of other displays. What I do want to show you are these 4 vertical blue lines on the left-hand side. These are the knockouts, right? And they show you the range. They give you a very clear floor and ceiling for each one. If I thought the S&P, look at it, it's been climbing all day, climbing, and now it's starting to roll over. If I thought it were going to continue to go lower, I might want to choose this knockout. Now, why this knockout? We are close to the ceiling and we've got a way to run to the floor. So if I were to sell this, all right, I can click on sell. Now I know I'm selling, it's red, all right? And I've got my, oh, you know what? I changed, let's do this. I clicked on this one, clicked on that. I'm clicking all over the place. Click on sell. There we go. Now I'm on sell on this knockout. And notice it gives me the ceiling. 41.55, 41.55, 41.05 is the floor. I can see that there. If I were to sell one of these, all right, let's just take a look. I might want to sell it. Ooh, the market's going up. Maybe I want to sell it at 41.78. Let's go ahead and put it up at 41.78. All right. If I were to sell it at 41.78 and I got filled, now let's go ahead and place that order. All right. So you can see there's 4,001 of these available there. I placed one up there. I actually sold it. All right, it's already in my position page. Pane. All right, I sold one at 41.78. If it goes up to 41.55, I mean 41.48. I'm sorry, 41.70. 41.48. 41.48. God, I gotta say what I'm actually saying. I sold one at 41.48. If it goes up to 41.55, I will get knocked out and experience a $70 loss. If it turns lower and comes back down to 41.05, I could potentially make 430. Now, I sold one at 41.48. Maybe I just want to make a quick profit, and I would want to buy it if it came down to 41.38. Okay, I can place a bid 41.38. All right, I want to click buy. I'm going to make sure I put in 41.38. Okay, could I try to buy one down lower? Could I try to buy one? I could try if I place my order. You'll notice that it's in my orders pane over here. I'm trying to buy one at 41.38. Okay. And I know that I sold it at 41.48. Okay. So I sold one, hey, and now it's going in my favor. I'm actually showing a small profit. So I can place an order above the market to sell. I could place a bid below the market. I could place an order in between the market. And notice how tight this market is. I mean, I could see the indicative price, 41, 47, 30, it's tick 40, as it's ticking around. I mean, this is a very tight bid-ask spread, and this is ticking around and moving. Delta 1, it will move right in line with the underlying. Now, if I thought this were going to go higher, I'd probably choose a different knockout because I'd want to probably limit my losses. If I bought one, all right, if I bought one and I thought it were going higher, I know that if it came down here to 41.35 because I bought it and it went down, I know how much I could potentially lose. If it went higher, I know how much I could potentially make. All right. And the where is the okay? By the way, this is a really good question. All right, now that's knockouts. I am now going to move over to call spreads, but before I move over to call spreads, I did get this question, and I'm trying to answer them as I go. If I go into my account setting, I go to account up here in the upper right-hand corner. If I click account, you'll see the refer a friend in there. Now I'm in a demo environment, so I am not going to see refer a friend. You would have your link if I were in a live account. That's where you would find that referral code in your live account, under refer a friend. Okay. Now, let's go ahead and take a quick look at call spreads, and then we're going to finish up with binary options, and we're going to look at the US 500 and binary options. We're going to look at short term, and then we'll look at hyper short term on something else. Now let's go to call spreads. I am going to go back to my indices. And I'm going to go to the US 500. Notice how we have a variety of expiration times. Oh, this one already expired. It just did. I can refresh. There we go. We've got the 1 p.m. One that settles in 9 minutes. We got a 2 p.m. It settles an hour and 9 minutes. You can choose the time frame for your call spreads. Which call spread suits you? Here, I'll just choose this one, and I'm going to go ahead and click on any one of the call spreads because, again, much like the knockouts, we have a clearly indicated call spread range on the chart. You simply click on a call spread and it will shade the region. If I thought this were going lower and I wanted to sell, notice when I click the sell, it shades it red. and I could see my maximum risk and my maximum reward. I chose one where we are trading near the ceiling. If I sold one, this is my way of choosing one that minimizes my losses and tries to maximize my gains. If I thought it were going higher, I might want to choose one or consider choosing one where it's near the floor. So let's just click on some different ones. This range is well above this range. Let's click a different range. Oh, we're moving further away. So right, we've actually gone through all of the ranges. That's because it traded higher all day long. Let's go back over and choose a shorter term one, and we're gonna have ranges that might fit this area a little bit better. Let's get rid of that. Let's expand this up. All right, so here we go. Let's take a look. If I thought this were going higher, I might want to choose here. We're trading right near, right? We're trading right near the floor of this one. All right, and these are much smaller contracts. So yeah, you just got to play around and take a look at the risk reward profile that works for you. This is these expire in an hour, and these are very small call spread contracts. So again, you could choose the one that suits you. Here's one where your maximum loss is only 33, maximum profit 67. And again, when you get into these trades, you do not have to wait until expiration. Now, if you want to know what I was talking about in regard to the premium, notice how it's currently trading around 41.48, right? So it's trading slightly below the floor of 41.50. But look at the prices of the call spreads. It's 41.53 to 41.53.6. Note that 4 points is the premium. That is the premium that's baked into this contract for that flexibility that you're trading a call spread that's right near the floor or ceiling. So unlike a knockout, which is a delta one, a knockout, this indicative price and the price that you're trading are going to be right in line. A call spread is going to have a premium component to it, and that premium component will be impacted by time to expiration and volatility. Okay, that's enough with with knockouts and call spreads. I want to spend the rest of the next little bit of time on binary options. Now, someone specifically asked about 20-minute binary options, and someone specifically asked about the S&P 500. I am going to look at that right now. All right, I am going to click, and you know what? Look how much time is left on this. There are 6 minutes to go. Okay, there's 6 minutes to go, and I am going to let's zoom in here. Okay, I'm going to change this to a 1-minute chart. Okay, and I am going to zoom way in and let's get a look at what's going on in here. And I am actually going to I want to show the strikes. All right, this is important. The reason I'm showing the strikes is you can see all of the various probabilities. Now, this contract is going to settle in 5 minutes and 30 seconds. This is a 20-minute binary option on the S&P 500. And these are 1-minute bars. You can see it's been pretty volatile. I mean, look at this. These bars have got some pretty long wicks and some small bodies. Notice how the probabilities will change for each one of these as time moves on and as the price of the underlying moves. All right. If I think this is going, I mean, look how quickly this changes. If I think this is going to continue going lower, I could try to sell one. All right. Now, notice I'm using limit orders. Did I actually sell? Oh, maybe I did sell one. I did sell one at 39.25. Okay. Somehow I tried to sell one and it started going lower. Now I sold one at 39.25. Now I can make 39.25. I mean, look at this, keeps going lower. Maybe I think it's going to keep going lower, and I want to sell something even, I don't even know. Maybe one here. Oh, look at it. It's coming all the way back. Wow. Look at that. These long wicks. I could have bought this back. Now, if I want to buy it back, I have to buy it back for a loser. You can see how quickly these volatilities change as the price of the underlying moves, knowing that in 4 minutes, every one of these is either going to settle at 0 or 100. Okay, every one of these is going to settle at 0 or 100, and we're just watching each minute these 1 minute bars tick. And now, if I'm uncomfortable with my position and I just want to buy it back, all right, maybe I just want to. I mean, now it's ticking lower. Maybe I might get my chance to buy it back lower. I'm just going to place some order. Let's see. I bought it back. Where did I buy that back? I just want to see. All right, I bought it back at 45.75, and so I ended up losing $6.50. Okay, did I have to buy it back? The answer was, do I have to buy it back? No. I don't know what's going to happen here, but for some reason I think this is going to go higher. So now I'm going to change my opinion, and maybe I think it is going to settle above this level. I'm just playing around. Remember, not a buy or sell recommendation. I now bought. What did I just buy? As I click around, I bought one at 57. Oh, look at that. I went down a strike and bought it, and now it's going lower. Now, where did I buy it? I bought it at 57.75. The whole point I'm trying to get here is that the probabilities move quickly. Right now, I bought one at 57.75, and maybe I would sell it at 67.75 and take, oops, oh, look at this. Maybe 72.50. Let's just put in 72.50. 72.50. Oh, no. Let's put in, it's going way in my favor. Maybe 78. Okay, I'm trying to sell it at 78. There's my offer. Now, am I going to trade it? I don't. I bought it. All right. So while we're playing around here, I lost on one contract, but then I lost $6. Then I bought one at 57 and sold it at 70. Then I made $20 on the next trade. So right there, I made $15. Now, the point, again, none of these were buy or sell recommendations. I hope you're not doing that. Let's cancel this order that I've got. I can't remember. Oh, this was a knockout. I'm just going to cancel this order. I'm going to delete that order. So I got no orders, and I do have a position. You know what? If I want to get out of that, by the way, if I want to exit the position, I can simply click on the position and place my order, and it'll unwind my position. Okay? I just wanted you to see how you exit a position. But with the binary options, let's take a look again. Oh, wait, I wanted to go back to 20-minute binaries, US 500. Yeah, as it spiked higher. Let's zoom in. Oh, you know what? And this is something I wanted to catch, and I apologize. Notice in the last 20 seconds, this contract that I traded in and out of, notice how everything sort of went blank in the last 20 seconds. And the reason that happens is nobody wants to price these when they're either going to be 0 or 100 in the next 6 or 7 seconds. So I exited the position early. They'll all either go to there. The contract just expired. When it expired, and it expired right here, these ones, which just reset, anything above here would have gone to zero, and anything below would have gone to 100. When we clip through, I'm going to refresh. Close this. Let's open it back up. Let's scroll it back down. We've got another 20-minute clock that just clicked in, and we've got a whole new set of strikes and a whole new set of probabilities. And notice how early on, with 20 minutes to go, these probabilities are sort of spread about, aren't they? Right? I mean, they're 50, 60, or in the 40 range. These probabilities are giving some chance because we don't know what's going to happen in the next 20 minutes. So there's that volatility component that is baked into the binary options when you've got 20 minutes to go. Remember, when we get with only a couple minutes to go, the moves in the price of these volatilities gets dramatic and extreme because, again, it's either going to go to 0 or 100, and things can change quickly. Now, I wanted to show 20-minute binaries. I think that was actually pretty good that we caught one. What I would normally show is we've got 5-minute binaries on foreign exchange products. And this is where you see, volatility every 5 minutes. There's 3 minutes to go. Every 5 minutes. Now, it doesn't appear there's much volatility right now in the euro US dollar because you can see the probabilities aren't they're here with 3 minutes to go. It's telling you there's not a lot of volatility at the moment. But as soon as volatility kicks in, these probabilities and these prices will move pretty dramatically. And it resets now this has got 3 minutes, every 5 minutes. And, you can always look around to see if, here's the pound yen. The pound yen might be seeing some volatility, but you got to play around. Some people love the 5-minute binary options with Forex. Others would prefer to stay in the equity index space in these 20 minutes. If you're not into 20 minutes and 5 minutes and you want a little bit longer duration, so there's not as extreme amount of volatility, I am clicking on the indices. Notice that we've got 2-hour binary options in the S&P 500. You could pick the 2-hour time frame that suits you. We've got daily ones. We even have weekly binary options. So if you wanted to look at what was going on in the S&P 500 for the week, the difference is going to be the strike prices are going to be much further apart, right? But everything works the same way. It's just going to look a little different because you're going to have strikes that are further apart, and it will move a little differently up because there's still a day to go in these binary options, where these other ones we're talking about hours, minutes, or even just, in the 20 minutes, a few minutes. With that, I want to thank everyone for joining us. Are there any other questions? I'm just going to toss it out there. Any last second questions? It looks like I've answered them all. Thank you so much for joining me today. Again, this was recorded. It will be available both on the YouTube channel as well as our website. If anyone would like the slide deck from today, please email customerservice@nadex.com and you can request it. But you would need to email customerservice@nadex.com in order to get that, and you would want to tell them it's the webinar from today's date and the intro to trading Nadex products. Again, I want to thank you all for joining me. Thanks for coming to Nadex. Please let us help you any way we can. If you can, check out those morning analysis sessions, those live streams on YouTube. Want to wish everyone good luck in the markets, and we'll catch you next time.